Hello, it's Tuesday the 10th. I'm FxPlew and whisper it quietly, but the worst of the weather may be behind us. 2 days in a row I've been on the air wheel. Get in there. Now, Morgan McSweeney quit on Sunday and Tim Allen resigned yesterday. That is as they both took responsibility for their part in the Mandelson mess. Meanwhile, Starmer has shrugged off any calls for him to follow suit and throw in the towel as well. The cabinet rallied in support, no doubt on a three-line whip, and Rayner even piped up on Twitter with a wider call for support. But where some are openly questioning Starmer's judgment and his future, markets are increasingly bracing for a challenge to his leadership. Bond prices spiked yesterday before settling down as the US opened, but it raises further uncertainty over fiscal policy in the UK going forwards. Over in the US, Stephen Moran has doubled down as a presidential puppet at the Fed. He formally resigned from his old position as chair of the White House's Council for Economic Advisors, pithy, and he's been on unpaid leave from that position since Trump appointed him to the Fed last year. We have non-farm payroll data due out tomorrow. Non-farm Friday was pushed back last week as the data is still being delayed after the government shutdown last year. Part of the delay may be down to the release of the annual revision to the total employment number. Estimates suggest that 2025 jobs numbers may have been overstated by 860,000 jobs, and that would mean that the US economy actually lost jobs last year. But rest easy, if you won a sweepstake last year, I have no plans to revisit the results for a recount. In the market, the dollar index pulled back to around 98.80 on those labour market concerns, and we kick off this morning around 136.70 against the dollar, 114.85 against the euro, and euro dollar is around 119.05 on the open this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.